There's a few things we still need to talk about. We need to talk about partial year depreciation and revising depreciation. This is very important. So we made assumptions when we've been calculating the depreciation prior to these videos, is it's always been annual for the whole year. We make the assumption that the equipment is placed in service at the beginning of the year. However, sometimes it's not, and when it's not, we're going to need to actually go in and prorate it, basically, or calculate for partial years. Okay, so I'm going to look at partial year depreciation. This is when a piece of equipment has not been put in service at the beginning of the year. Perhaps it was put in March 10th. So if it was put in March 10th, it would be considered for the whole month of March. If it was put in on March 21st, it would not be considered for the whole month, and you would start calculating it for April only. So we're going to look at partial year depreciation for the three different methods of straight line, units of output or activity, and double declining. For straight line, it's prorated based upon the number of months. So if we go back to our calculation, so here's an example that we didn't buy the forklift until October, so we only have it in operation for 3 months. So here's how we did the annual depreciation. So what happens is, this is annual for 12 months. Then we're going to take this and multiply it by 3 months out of 12. So year 1 depreciation would be a partial year depreciation of 1100. This is for straight line method. Now remember, this was a 5-year depreciation. So in fact, I will still have a 6th year. So year 1 would be 1100. Year 2, 3, 4, and 5 would be the 4400, but I would have 9 months in year 6, which would be 3300, because the depreciation expense still has to equal $22,000. Okay, so just wanted you to know. So units of activity, it doesn't make a difference here, because no matter what, it's based upon how much usage. It doesn't make a difference if I started using the equipment January 1st or October 1st. I'm only counting the usage for that year. So it really just doesn't make a difference. Here's my calculation. I was $220 per hour. And so again, partial year depreciation doesn't matter with units of activity because it only counts that year. So now let's move to double declining. Here's where it gets a little bit more difficult. It's prorated just like straight line. So we're going to go back to our double declining. We calculated 40%, if you remember correctly. So the first year was $24,000. By the way, remember, we take the cost or the book value at the beginning of the year times 40%. So $9,600 is for the whole first year. But I only had it in operations for 3 months. So I'm going to take 9,600 times 3 months divided by 12. And year 1 would only be 2,400. So this is year 1 depreciation, 2,400. So do you remember double declining? What happens there is I take the book value at the beginning of year 2. So the book value at the beginning of the year 2 would be the 24,000 minus the 2,400, and I would take 40% of that, which would basically be 21,600. I'm sorry. So my book value is 21,600 times the 40%, and this would be my year 2 depreciation. Okay, so partial year depreciation, double declining balance. Now, I'm going to give you a hint. If I'm using 3 years, and you're only going to hear this here, and I should have said it before. If you're using 3 years like you're doing in the homework, you really want to change it to a fraction. Instead of doing 33.33%, you want to make it 1/3, and double declining would be 2/3. Just a little hint. Okay, this concludes partial year depreciation. We're next going to move to revising depreciation. Sometimes I actually have to revise the depreciation before I'm fully depreciated for whatever reason. But the only 2 things that can actually change are the useful life can either be longer or greater, and the residual will change. So we're going to talk about how to revise it. So let me explain. Here's what we did. Initially, we bought a piece of equipment for $140,000. It had a 5-year life and a residual value of $10,000. So if I calculate my straight line method, and by the way, revising is only used for straight line method only, I would be having $26,000 a year for depreciation. So each year I would depreciate $26,000. So at the end of the second year, I've had 2 years times $26,000. Here's my accumulated depreciation. Here's my initial cost. So here's my book value at the end of the second year. Now I want to change my either my residual or my useful life. So at the beginning of the third year, we determined that the useful life is 8 years and the residual is 8,000. So here is the formula to revise depreciation. You take the book value at the time of the revision, which is 88,000, minus the new revised residual value, divided by the new revised remaining useful life. So here I actually changed the residual and the useful life, and from here on in it would be 10,000 a year. But what if I only changed the bottom number and didn't change this? Then I would take it back to the original residual value. Okay, so you only change what needs to be changed here. If nothing changed on this one or this one, you use the original. And so going forward, from here on in, it would be 10,000 a year instead of 26,000. Okay, so here's where I made the change, and then it changed from here. So this concludes the partial year depreciation and the revision depreciation methods.